It's time to review what we've learned in this training using a practical example so that you can see how to use the concept that we've defined and all the work that you've done in your own business. So we're going to look at an example. This is a fictional case study because so far in the training, we've defined all of the different costs that you have and we've looked at how to calculate them. But in reality, in real life, you're going to work with various products and you're going to be selling those various products at various different prices. You might also sell on multiple online channels and marketplaces. You could be selling on your own website, on something like Shopify. You could be selling on a marketplace like Etsy, Amazon, or any other online marketplace to sell your handmade products. And you also might be using multiple payment processors and each have different merchant fees. You have Etsy fees if you are using Etsy, PayPal fees if you are using PayPal. So let's take a look at what this would look like and do a little bit of So let's take a look at a practical example to put all of this different concept into practice. The fictional example that we are going to be using is a handmade business that sells colorful embroidered pillows, textiles, bags, maybe some clutches and some blouses as well. And this specific business sells on the Etsy platform using the PayPal integration. So it means that this business is selling on Etsy and that when customers purchase from this shop, the payment are being processed by PayPal inside of the Etsy marketplace. The average product for this shop is $80 and that includes shipping. And like any business, this shop has fixed monthly costs that need to be paid each month regardless of how many items get sold. So the first question that we're going to ask ourselves is how much sales does this business owner need to make to break even, so to cover their cost and to make a profit? So this is called the break-even analysis. The break-even point is the number of sales at which an organization or a business makes neither a profit nor a loss. So it's the amount of sales needed to cover cost for a given month. Making less sales than this break-even point would mean that the costs for the handmade business are higher than the revenue for this handmade business, and so a loss would be recorded. If you're making more sales than the break-even point, it means that the costs are not only covered, but profit is also being generated. And the way to calculate the break-even point is to divide your fixed cost by your average product price minus your variable cost. So what are the fixed costs for this fictional example that we're looking at right now? Well, this business has a subscription fee for the Canva design software, which is a software that this business owner uses every month to create graphics for social media and more generally to create graphics to promote the business online. And it costs $9.95 every month. And because this is a subscription fee, it is a fixed cost because this is something that this business owner is going to have to pay whether she makes sales in a business that month or not. She also hires an assistant, and that's an agreement of $100 a month for this person, regardless how many sales are being made. This person helps with social media, and so this is an ongoing recurring expense as well for this business owner. We have bills and utilities for $50 a month. An accounting software subscription that's used for keeping the books up to date and making sure that the finances are in order. That's a recurring fee of $19 a month. And then we also have a budget for Etsy ads of $100 a month. Now, if you remember from what we've learned previously in this training, your marketing and advertising costs can be either variable or fixed. In this case, it appears under fixed costs because it has been budgeted as a recurring expense that every month a budget of $100 is going to be invested into Etsy ads. So this brings the total of fixed costs for this business to $278.95. Based on that, a very common mistake that most handmade sellers make when they first try to calculate their break-even point is this. We know that the fixed monthly costs are $278.95. We know that the average product price for this business is $80. And so the common mistake is to think that To cover the cost, we just need to make 278.95 divided by 80, which is 3.48. And so we think that we only need to make 4 sales to cover the fixed cost that we have. But each sale at the $80 point that we're making is going to incur variable cost. Every time you make a sale, you have to pay for the labor that goes into it, you have to pay for the supplies and the materials that go into the products you're creating. So there are production costs associated with each sale that you make. So every time you make a sale, yes, you are helping cover those fixed costs, but you're also incurring variable costs that need to be accounted for. If you remember the formula for the break-even point, it's fixed cost divided by the average price minus the variable cost. And this common error forgets about the variable cost. So what is the real break-even point for this business then? Let's take a look at the variable cost for this shop to be able to answer that. So on top of the fixed cost that we just looked at, this shop has an average production cost. So for each product created, there are costs in supplies and costs in labor that adds up to $20 per product. And then we also have, because we're selling on Etsy, to pay some fees that Etsy charges us to use and sell on the platform. These are Etsy transaction fee, which is $4 for an average product price of $80, Etsy listing fees, 20 cents, and the PayPal fees, which is the merchant fees that PayPal charges us when someone makes a purchase using Etsy, which are $3.82. And then of course we have to pay shipping to send the item to the customer, which in our example we had set at $10, which means that for every sale of an $80 product, this shop needs to pay $38.02 in variable cost. Now you might be wondering what those Etsy fees are and what those PayPal fees are. And so I'd like to show you really quickly a really great tool that the International Trade Center has developed to help you calculate those fees. That's called the Ecommerce Cost Calculator. The link to it is in your workbook. On the last page, you will see it under a recommended tools section. So you can just click on that and it will take you to this page. And I want to show you how I've just used it to calculate the fees for this example. Okay, so here we are in the e-commerce cost calculator from the International Trade Center, and because in this example we are selling with Etsy and we are trying to calculate the Etsy fees, I'm going to select Etsy here at the bottom, and then I'm simply going to input the prices and the data that we have from the example. So we know that the average product price is $80 and that included a $10 shipping charge. So the product price is effectively $70 and shipping is $10. We want to see what the fees are for one item being sold. And we know that the production costs are $20 for an item and the shipping is $10. Now at the bottom here, we are going to select PayPal because that's the payment processor that we are working with. And we are going to select international because PayPal charges different fees whether you are selling domestically in the US or internationally. So in your case, it will be international. And we can see here that the ecomConnect calculator has done the math for you, which is fantastic. And it's giving you those fees that Etsy is charging you. So Etsy will charge you 3 main fees. The first one is a listing fee, which is a fixed fee of 20 cents for each new product that you are listing for sale on Etsy. So the first time you upload a product on the platform, you will be charged a flat fee of 20 cents to have that product for sale on the platform. And this listing fee will be renewed every time a new sale of this product is being made. Etsy will also charge you a 5% transaction fee, which in this case is $4. And finally, you have your payment fee or your payment processing fee, which are PayPal fees in this case because we have chosen PayPal as the payment method. And so it amounts to $3.82. So this is how you can calculate really quickly what your fees would be depending on your product prices, your shipping charges, and this calculator actually does a lot more than that and also tells you what your gross product profit margin is, your revenue, your total cost. So it's a great tool to know about and to bookmark in your internet browser so that you can come to it and do those calculations a lot more quickly than if you had to do it yourself. Now that we know what all the variable costs for this handmade shop are every time a product gets sold, we are ready to calculate the real break-even point for this handmade business. So as a little summary, remember we have fixed cost every month of $278.95. We know that the average product price is $80 and our variable costs that we just calculated are $38.02. Shipping is $10, listing fee 20 cents, transaction fee $4, and the PayPal fees $3.82. This is all things that we've learned using the ecomConnect calculator. And then remember, we also have production cost of $20 for supplies and labor every time we have to create a new product. So looking back at the formula for the break-even point, it's fixed cost divided by your average price minus your variable cost. So in our case, it is $278.95 divided by 80 minus 38.02. And this gives us 6.64, which means that the real break-even point for this handmade business is 7. So this handmade business needs to make 7 sales a month at minimum at an average price of $80 per sale to start making a profit. Anything below that, and this business is not going to be making a profit, but will be recording a loss. So this is why it's very important to do your own break-even point analysis so that you have an idea of how many sales at minimum you want to be making to cover your cost in any given month. Now that we've looked at the break-even point analysis, let's do a monthly analysis and add a little bit more complexity to our example by adding a few more expenses based on the fact that this time we're not just going to be selling on Etsy, but also on our own website. So we're going to keep the same business selling embroidered pillows, textiles, bags. We still are selling on Etsy using the PayPal integration like we just saw, but this time we are also going to add a Shopify website where payments are also being processed using PayPal. The average product price is still $80 including shipping. And in this given month, this handmade business has made 37 sales on Etsy and 2 sales on their own website. So in total, this business has made 39 sales at an average price of $80, which means that the revenue for this business is $3,120 for that month. Now, based on what we know from the break-even point analysis that we just did together, we can safely assume that this business is going to be generating a profit. It's true that we just added an added expense because we are also now selling on our own website using Shopify, and so our costs are probably going to be a little higher. But with 39 sales and the original break-even point being 7, it's fair to assume that we are going to be in the green and have a profit at the end of the month. But let's look into it, do the full analysis and see exactly how much is left at the end of the month in this business. So the fixed costs are the same as they were in the previous example, but this time we added what's in green here, which is a subscription fee for a Shopify website. Shopify is a platform that helps you build your own e-commerce store online on your own domain, and they charge you a subscription fee that you have to pay every month, whether you make sales or not. So it's a recurring subscription fee, so it's a fixed cost. In this case, the payment plan is $29. So this is added to what we already had as fixed costs, which were a subscription fee for the Canva design software of $9.95. We had a social media assistant for $100. We had bills and utilities for $50. An accounting software for $19, and a budget for Etsy ads of $100 a month. So the new fixed costs in this example are $307.95, which is a little higher because now we also pay for the Shopify platform. So let's take a look at the variable costs now. The average production cost per product is still $20, but we know that we have made 39 sales. So our production costs that month are going to be 20 times 39, which is $780 in this given month. We are also paying still for Etsy fees This time, remember, we have made 37 sales on Etsy, which means that the total fees on Etsy this month are $293.74, and that includes your Etsy listing fees, your Etsy shop PayPal fees, and your Etsy transaction fees. Here again, I'm using the ecomConnect calculator to figure out what my Etsy fees are going to be. And so I'm keeping the product price and the shipping charge that we had the same, but this time we are looking at 37 sales. So I'm going to increase the quantity here, and you can see that my total transaction costs have gone up to $293.74. So that's how I calculated them. We also, of course, still pay for shipping every time we have an order, and this was set at $10. So given that we've made 39 sales this month, we are going to have $390 in shipping charges. And what's really new this month is the addition of this website that's hosted on Shopify, and that is using PayPal to process the payments. So we didn't have that in the previous example, and we need to calculate the fees for the sales made on this website as well. So the total Shopify website PayPal fees is $7.64, and this includes a fixed fee that's charged per transaction, regardless of how much the amount of the transaction is, and a percentage fee that's actually this time based on the transaction amount. Let's jump back into the calculator so I can show you how to calculate this. So here we're back in the e-commerce cost calculator from ecomConnect, but this time I want to show you how to use the PayPal option here, because this is what we are using on the Shopify website in this example. And what's important to understand here is that PayPal will charge two different types of fee. The first one is a fixed fee that's always going to be 30 cents. And this is regardless of the price of the products that you are selling. So if you sell a product for $90 or $15 or $200, this fixed fee is always going to be 0.30, and it is charged per transaction. And then the other fee that they're going to charge you is a percentage base, and it depends whether it's domestic US or international that you are selling. But in our case, it's going to be international. And so the variable fee in this case is 4.4% of the transaction value this time. So this will vary depending on the price of the product that you're selling. So in our example, we made 2 sales at $80. And so we want to calculate them separately because very likely they were 2 separate transactions from 2 different customers. And so we are going to pay the fixed fee of 30 cents twice. So what we want to do is look what it is for one transaction at 80 here, which is 3.82, and then multiply that by 2 because we had 2 of those transactions on the website that month. Otherwise, you can also put 160 if you want to put the full amount here, but remember to add to this amount here an extra 30 cents of fixed fee that you will have paid if this $160 were made in 2 separate transactions. And finally, we've also added here a $250 amount for a social media campaign that was run to generate those sales this month. That is not a fixed cost. This is not something like the $100 Etsy ad budget that we've seen in the fixed cost part. This is something that was paid to generate the sales of this specific month, and that would fluctuate depending on how many sales are being made. So that's why it's under the variable cost in this example, and this brings the total variable cost for that month to $1,721.38. So when we compare the cost and the revenue, we have $17,021.38 in variable cost. We also have, remember, $307.95 in fixed cost that month, which means that in total we have $2,029.33 in cost to pay this month, but we also made $3,120 in sales. So our profit for this month is $1,090.67. And as we kind of know from the beginning of this example, we are indeed creating a profit and we're in the green because we have made more sales than we've had to pay for cost. Now, what's important here to remember with the profit as well, and I will leave you with that, is that this profit needs to be used for a few things. Depending on your local legislation and government, you might have to put some of that money aside to pay for taxes. You also might consider keeping a part of this in the business to reinvest in the business and maybe get a better piece of equipment that you've been wanting for a while that would help you create the product more efficiently. You are also, of course, going to pay yourself. That's the owner compensation. And it's also important to have in your business a safety net. So that's money that stays in your business bank account in case of an emergency, in case of you not making sales for a couple of months for some reason. You want to make sure that you have a little bit of money aside to cover expenses when those months happen, if they do. And it's also great to have that money in your business bank account because it helps you manage your cash flow as well, so that you know you always have money aside to pay for the bills that you are going to have on time. Thank you so much for being with me during this training. I hope that you found it useful and best of luck with your business.